Happy Monday morning. This is June 8th, 2020, and I figured it's time that we discuss mortgages and what's going on out there. So I want to discuss two key things this day and age. We want to discuss, is it the right time to break your mortgage? I've been talking to a lot of clients, and it seems to make some sense for a lot of people. Not necessarily everybody, but definitely worth a conversation. Number two, we just heard earlier this last week that CMHC, one of the biggest mortgage insurers across Canada, will be changing their rules. So we're going to discuss both of those momentarily. Let's start with the refinance or the switching out or breaking of your mortgage. So obviously if you have some debts, sometimes it makes sense, especially with the rates are as low as they are right now, to pay those penalties and have your mortgage broken and consolidate all your debts, your visa debts, your student debts, your car debts, any other debts you may have, and put those in your mortgage. There is no cheaper form of debt than mortgages, especially right now in light of the COVID-19. It's not all bad. One nice thing about this whole thing is that the Bank of Canada has dropped the rates, and in line with that, many of the lenders have dropped their 5-year rates. So I'm seeing some of the best rates I've ever seen. So I've been making a lot of calls, but obviously don't have time to call everybody to discuss whether or not they'd like me to review the penalties for breaking it and compare that to how much money they would save, see if it makes a lot of sense. And it's not just about savings. Some of my clients said, Dan, I have my mortgage coming up in about a year's time or 6 months time or maybe even 2 years, but I know that in a year's time, I highly doubt these rates will be as low as they currently are. So in light of that, perhaps this is a good time as well to break. So the next 5 years, I don't have to worry about where are the rates going to be when it comes up for renewal. So if you want me to look into this stuff, don't hesitate, give me a call. I'll post my phone number down below or my email within the write-up, and you can definitely give me a call and I'll look into those things for you. If you want, you can approach your lender and say, hey, what would my penalty be to break it? Or if you prefer, I can do so on your behalf, and then I can actually run the numbers and say, okay, here's what we're going to be looking at with discharge fees, penalties, and here's how much money we're going to be saving on the other end. Okay, and again, like I said, if you want to refinance, this is a great time to do so. So definitely don't let this time pass. I think these rates are partially this low just because real estate is running at last I checked, 54% of normal, which is actually quite the improvement. Last month, the month of April, sorry, not last month, but April, we were only at 30%. So back in the Kitchener-Waterloo area, Cambridge, we are back up to 54, so we're seeing an 80% increase in volume, but still not exactly where it should be. 80% from the April, so May was up 80%. Okay, let's talk about these new rules. Now, this is really only going to impact those who are considering buying a home now or in the near future. The CMHC, which again is a requirement for anybody who has less than 20% to put down the home, they have to have CMHC insurance. Now, there are two other insurers. There's Canada Guarantee and there's Genworth. At this point in time, they have not changed their rules, so we can still get you approved with those other lenders, but chances are they are probably going to follow in suit, and we're going to have those those new rule changes. And what are these rule changes? Well, one of them is that your beacon score must be 680. Which is not that big of a deal. A lot of people have a 680, but those that are struggling to get their credit rating up there, unfortunately, if you're at 650, which is what we used to be able to get you approved for, we will no longer be able to get you with a lender in that case. You'll have to wait and keep on working on that credit bureau and trying to get that score to 680. If you have any questions regarding that and how you can go about doing that, give me a call. I can definitely discuss that with you. There's a few different steps you can take to ensure your beacon score gets up there. On the other hand, the bigger deal is the GDS TDS. So that's GDS is gross debt score, TDS is total debt score. In the past, we could do a 39% of gross income on the mortgage, property taxes, and heating, and 44% of your gross income on your total debt. Now that is being dropped down to 35-42. Again, this isn't going to mean a lot to you, but I'll break it down for you. It's really going to impact your affordability or what you'll qualify for by about 10 to 12%. So if previously you're qualifying for, let's say, a $400,000 home, you're now only going to qualify for a $360,000 home. So if you've already been pre-approved, good idea to reach out to your mortgage broker. I know I've got to make a lot of calls over this next week, re-review the numbers to ensure my clients aren't out there trying to buy a home thinking that they're pre-approved when the reality is these new rules are going to kick in. Now again, we are still waiting for Genworth and Canada Guarantee, so hopefully they will not follow suit, but I highly doubt it. I will post an excellent video at the end of this one, either in my bottom comments here or within my newsletter, or if I can, I'll link to the end of this email from the president of Mortgage Architects. He does an exceptional job of really breaking down the information for you, okay? And again, don't hesitate, give me a call, email me. The phone call I think would be more warranted in this situation. it is a little bit complicated. And I'd love to kind of help you along in this process to ensure you're not getting yourself in trouble and that you will definitely qualify for that mortgage bill. Okay guys, thank you for your time. Hopefully you found this very helpful and insightful. Like I say, give me a call if this is applicable to yourselves, and if not, share it with friends and family. Make sure you subscribe to this YouTube channel or Facebook or LinkedIn or whatever it is you have it on there, so you continue to get these notifications. And yeah, don't hesitate to reach out to me or tell your friends or family members. Give Jan a call, because now is the time, like I mentioned earlier, to look at doing that refinance or possibly even breaking out mortgage and secure today's rates, not the rates a year from now, because who knows where it's going to be, especially when the market starts getting up and full speed. Take care, guys.